All right, welcome. Today, we're going to tackle something your parents probably swear by, but you might find, well, a little old school: gold and silver. But what if I told you that these so-called boring metals have actually been crushing it, even outperforming the stock market? Yeah, let's dig in and see what's really going on. You know the draw, right? Especially if you grew up in an Indian household. You have heard this 1,000 times. Beta, buy gold. It's like the official parental mantra. And let's be honest, you were probably thinking, mom, dad, what about stocks? What about crypto? Gold just felt kind of meh. Well, you might want to sit down for this one, because if you look at the actual numbers, over the last decade, gold has delivered annual returns of over 15%. That's actually better than the Nifty 50, the index tracking India's biggest companies. So, yeah, turns out mom was right all along. So what gives? Why is gold suddenly having this huge moment? I promise you, it's not just random luck. There are some massive global things happening in the background that are pushing this. And it all really comes down to three big drivers. It basically boils down to this. First, when people get nervous about traditional currencies like the US dollar, they run to the safety of gold. Second, it's pretty much the best shield you can have against inflation when governments print tons of money. And third, and this is a big one, it's not just us. The biggest financial players on the planet are buying it up like crazy. Look at this number: $37.5 trillion. That's the national debt of the United States. It's just mind-boggling. Now, to pay the interest on a debt that huge, what do governments do? Well, they fire up the money printers. And the more cash they pump into the system, the less the money in your pocket is actually worth. Let me break it down with a super simple analogy. Imagine there are 10 eggs for sale and only 100 rupees in the whole economy. Easy, right? Each egg costs 10 rupees. But then the government prints another 100 rupees. Now you have 200 rupees chasing those same 10 eggs. All of a sudden, each egg costs 20 rupees. That, right there, is inflation. And check this out. It's not just regular investors feeling the heat. We're talking about entire countries. Central banks, from China all the way to India, are stockpiling gold at a record pace. I mean, just look at India's reserves. They jumped from 650 tons in 2020 to almost 880 tons today. That's a massive vote of confidence from the biggest players in finance. Okay, so we've got a handle on why gold is so hot right now. But what about its little brother, silver? They're always talked about in the same breath, but they actually play two very, very different roles in an investment portfolio. The easiest way to think about it is like this. Gold is your stabilizer. It's your safe haven when the economy gets rocky. Silver, on the other hand, well, silver is the accelerator. It's mainly an industrial metal, and because of that, it's way more volatile. We're talking 1.5 to 2 times the price swings of gold. And here's a key reason why silver is so different. A massive 60% of all silver gets used up by industries. It's a critical component in everything from solar panels and electric cars to, the very smartphone you might be holding right now. So there's this constant, real-world demand for it that gold just doesn't have. So that leads to a pretty obvious question, right? How can you tell if one is a bargain compared to the other? Well, investors have this really neat little tool called the gold to silver ratio. It's exactly what it sounds like. It tells you how many ounces of silver it takes to buy 1 single ounce of gold. Now just look at this gap. Over the last century, the average has been around 67 to 1, so 67 ounces of silver for 1 ounce of gold. But today, it's over 90 to 1. That huge difference suggests one of two things. Either silver is super undervalued right now, or gold is a bit overvalued. For an investor, that's a really interesting puzzle. Okay, let's get to probably the most practical question of all. If you're sold on the idea, how should you actually invest? It's time to finally settle that age-old debate, buying physical jewelry versus going digital. Let me be crystal clear about this. Jewelry is not an investment. The second you walk out of the store, you've lost money on making charges and taxes. Reselling it is a pain, and you're never totally sure about purity. Digital, on the other hand, is the complete opposite. It's pure, it's insured, you can buy or sell it instantly, and you can get started with just a tiny amount. It's a no-brainer. And the best part is, getting started with digital is incredibly simple. You've basically got 3 main options. Gold ETFs, which trade on the stock market just like any other share. Then you have SIPs, where you can automatically invest a small amount every month. And of course, gold mutual funds. You can access all of these right from an app on your phone. Okay, we have covered a lot of ground. The why, the how, the what. So let's pull it all together into a dead simple, actionable plan that you can use to get started. Now, for most people in their 20s and 30s, a really sensible starting point is to put about 10% of your total investment portfolio into precious metals. This isn't about going all in, it's about adding a layer of stability and protection without taking on too much risk. It's all about balance. So here it is, your 3-step plan. It really is this easy. 1. Pick your digital method, an ETF, an SIP, whatever works for you. 2. Set up a recurring monthly investment. And please do not try to time the market. Just be consistent. And 3. Be patient. You have to think long-term, like 5 years or more. And one final critical reminder. The prices of gold and silver will go up and they will go down. Their path is never a straight line. This isn't a get-rich-quick scheme. It is a long-term strategy, and patience is absolutely everything. So I'll leave you with this final thought to chew on. In this crazy world of crypto, AI stocks, and wild market swings, is it possible that these ancient physical metals are actually the most future-proof asset you can possibly own? The numbers certainly give you a lot to think about. Thanks for tuning in.